The views expressed in this podcast are those of the panelists and do not necessarily reflect the views of U.S. Money Reserve.
Welcome to America's Gold Authority podcast. I'm your host, Mike Barnes, and joining me today we have Ed Moy, the 38th Director of the United States Mint. Ed, so glad you're here.
Mike, thanks for that great introduction and no free samples for you today.
Okay, I got you for that. We also have Brad Chastain, Vice President of Retirement Education at U.S. Money Reserve. Brad, thanks for being here.
Thanks for having me today.
You bet. Finally, we have Stephen Shakespeare, Executive Director of Sales for the IRA division at U.S. Money Reserve.
Thank you, Mike. It's good to be here.
Glad you're all here. We have so much to talk about today. We're going to have a great topic lined up as we talk about the case for Gold IRAs, insights from a former U.S. Mint director. Ed, that is you. And let's start with you about an IRA. All the types of IRAs, how do you keep them straight and what are they?
Yeah, well, quite simply, that's a good question because a lot of people that when they find out that I'm Mint Director, they ask about it. And so I've had to figure out a way to explain it so that everyone understands and gets the basics. But bottom line is IRAs fall into roughly two categories. The first one is the traditional IRA. Mm-hmm. That's the one where you take pre-tax dollars and you put it into an IRA, and then you pay taxes when you take the distribution out. Yeah. And then another IRA came along called the Roth IRA, which is you take post-tax money, put it in, and when it's time for a distribution, you don't have to pay any taxes on that. So it all depends on whether or not you think you're going to be in a high tax bracket or a low tax bracket when you retire. But there's one that I helped promote when I was the Mint Director, and in 1997, the Congress passed a law allowing for gold to be put into an IRA. And that's now known as a precious metal IRA or a gold IRA. And that's where you set up an IRA just like you would any other account. And instead of putting money in mutual funds or stock investments or so on, you get to put it in gold. And that has really, in the last 15 years, that has become an extremely popular product.
And Brad, as we talk about retirement education, having to choose which IRA you go with and where you invest your IRA money is tough, isn't it?
It is, yeah. And like so many financial topics, the answer on which one is right for you is it depends. Yeah. But there are some considerations. Ed mentioned a couple is tax bracket, what you think you are today versus in the future. So if somebody thinks they're going to be in a lower tax bracket in retirement, oftentimes traditional may make more sense where they're paying taxes later on and getting the tax break today, other way around from Roth. A lot of people can actually benefit from having a mixture of the two, in fact, because it gives you more flexibility in how you manage your tax situation in retirement if you do have both. Because you can take out money while you're in a low tax bracket from traditional, for example, but then as you take out more and more money and you get pushed into higher tax brackets, or you take out a large lump sum to buy a second home or pay for children's weddings or travel the world. That could put you into a new tax bracket. Taking out a large lump sum and having some Roth that you can take out tax-free can help you manage those situations more effectively
that's such
as well.
A good point because it doesn't have to be an either or. These are a range of tools that you can pick out the combination that's going to work best for you.
Precisely.
And you use the word mixture, and it's kind of like a puzzle in some ways, Stephen, because you have to figure out the way you want to diversify, and that can be hard to do.
Exactly. And the easy way to look at it is, as Ed and Brad were saying, if you're gonna mix it up, then you can decide I want to have 50% of this year's contribution going to a Roth, 50% of it going into traditional. Do I want and then how do I diversify inside of that diversification, if you will? So, stocks, bonds, mutual funds, everything that is usually conventional as it was. And then you can add, depending on the custodian that you're using, precious metals, real estate, cryptocurrency, and you can diversify in those lines.
There are so many options. Brad, I have a question for you. We hear the term Gold IRA all the time. What is that? Is it a misnomer?
It's a marketing term. It's really a marketing phrase that gets used by folks who are offering the ability to hold gold and silver and platinum and precious metals inside of an IRA. But it's still an IRA. It still offers Roth as well as traditional ways of handling the taxes on it. But most custodians are really geared towards just holding paper assets, stocks, bonds, mutual funds, ETFs, and conventional things that we're used to talking about. And some custodians, like Equity Trust that we partner with, have really optimized themselves to be able to facilitate other things like even real estate and cryptocurrency, but especially precious metals.
Yeah, and so Congress recognized that there was a group of custodians that specialized in a greater variety of different assets. And one of the questions that had come up at the time is, can we put gold or silver or other precious metals? And it was unclear. So Congress made that clear to get rid of any ambiguity. It is legal to put gold, silver, platinum, palladium into an IRA. And so they codified that in that law in 1997. And customers have been benefiting from it ever since.
Well, you say benefit. There are lots of benefits from diversifying your IRA, and that's what you're able to do here.
Correct. Yeah. So, having the ability to diversify with an alternative tangible asset that at some point you're able to take out of that IRA, possibly down the road, is going to be very, very beneficial. Also, having an asset that doesn't correlate with everything else is going to help you.
Yeah. I know I've been in 401ks that you were very limited. You can only invest in these things, but having this type of way to diversify is very appealing to the client.
It's got to be, yes, because it gives them that security, that difference, something that is not going to possibly be affected by a downturn in the stock market. Something that's that doesn't correlate 100% with.
So that's especially important for retirement. It's different if you're a day trader working through the machinations of whatever the market's doing. But the problem with investing well in retirement is you're trying to forecast what's going to happen 30 years from now. And bottom line is there's a lot of smart people, but they're not going to be able to figure out exactly what's going to happen 30 or even 10 years from now. And so what is a prudent way to look at your retirement is to make sure that you're diversified well enough that regardless of what happens, you're going to end up with a better portfolio when you retire than when you started.
I think that's important in terms of investing for the future. One of the things that a lot of people don't realize is that portfolios that people are put into today are based on back testing and looking at how the last 100 years have gone. And this is a time when the United States became the world superpower, the US dollar became the global currency used as the reserve currency. And we're in a time where things are changing. And so you want to make sure that you have a portfolio that can withstand whatever the future lies ahead, that is most likely going to be very different than the last 100 years that portfolios are really designed for. So most people are walking through life right now with a retirement plan that's built for the past when they really need a roadmap for the future.
But when you're just talking about gold, I want to know, Brad, what is the difference between a gold IRA and a gold exchange traded fund?
Yeah, the difference is a paper asset versus an actual tangible physical asset. So an exchange traded fund, it's a type of mutual fund. It trades a little bit more like normal stocks than mutual funds. But when you own it, it's a paper claim on a trust, and the trust owns gold. So you don't actually own gold. You own shares of a trust that have gold, and you can't redeem it for gold. So if you sell it, it's based on somebody else, just like selling a stock. Selling it to somebody else who wants a share of that trust rather than exchanging for physical gold. Whereas what we do here at U.S. Money Reserve is we put actual physical gold in custody on your behalf that you own, and we'll talk about it, I'm sure, at some point. But you can actually get access to that later on and take the gold home when you're ready.
And my experience is a lot of people are initially attracted to an ETF because they get the benefits of gold prices rising. but they don't have to worry about storing it and caring for it. But they don't look at the downside, which is, yes, you can benefit out of the gold prices rising, but you're also depending on the management as another layer that eats up, management fees eats up, some of the upside. And then you're also trusting the management to make right decisions because they're just not allowing you a share. They're also allowing other people to use that gold as a collateral for shorts and longs and a bunch of other stuff. And so they have other claims on that gold that sometimes if the bet goes right, everyone wins. But if the bet goes bad, it's just not the price of gold anymore.
Yeah, so there are different risks there. And the fees that you brought up actually make a big difference, especially for somebody saving over a long period of time for something like retirement. The fees are a percentage of assets. So the more your assets grow, the larger the fees actually become.
Yeah.
And we've done the math on them. We have it in some of our materials where you can actually see the growth of just plain physical gold versus in a gold IRA versus an ETF, where those fees are constantly eroding the earnings over time. And what many people don't realize is to pay the fees of managing the fund, there's actually gold that's sold from the trust in order to cover those fees. So over time, you may own the same number of shares of trust, but it actually represents a smaller proportional ownership of the
actual
that's
gold
inside of that trust.
Yeah.
Right. And so when you're buying gold from a physical IRA perspective, you pay that, that small commission initially, and that's it. Yes, you have a small storage fee, a small maintenance fee, but nowhere near the ongoing fees that you might see with an ETF.
And those are stable over time versus changing with the asset value.
It's a great reminder that we have to keep our eyes open about fees because it can hurt you in the long run in so many different ways. But we also have to keep our eyes open the fact that so many financial institutions, you cannot invest in precious metals as opposed to U.S. money reserve, lots of gold and silver to invest in. Why are some places limited and cannot do that?
Yeah, well, I think the easy answer to that is when these organizations started, gold was not a legally approved method. And so they just built their business around all these traditional ways that you can invest in retirement. And when this law passed in 1997, it was a very complicated transaction, of which companies like U.S. Money Reserve have made that transaction very simple these days. But that is foreign territory for these other companies. And further, they're concerned because they get paid off the total amount under management. And so if you're saying, I have an existing IRA and I want to take 25% of it, roll it over to a gold IRA, now they're making money on 75%, not 100% of their assets. And so there's a financial disincentive for them now to consider a specialty like a gold IRA.
Another aspect to it is the business model of large financial institutions is their investment products. That's where their money comes from, and that's what they want to get people into. It's not really around necessarily managing IRAs. That's not where the money comes. But enabling people to have IRAs gets more money into their investment products, right? As people roll over retirement plans, as people save because of all of the benefits of IRAs, people want to have IRAs, but it's more of a service that's provided in order to get more money into the assets that they manage versus getting people into just an IRA.
Yeah, and that's so important. And I just have to say how special it is to have you on the USMR team coming from Vanguard. You know this firsthand.
Yeah, and a lot of people don't realize too is when you have an IRA at a large investment firm, and even if it's professionally managed by an advisor especially, the assets that are chosen aren't necessarily chosen by that advisor. There's actually a larger team of professionals that will define what the portfolios look like, and the advisor is there to work with someone to make sure that they align them to a portfolio that meets their objectives that are laid out, but they're not actually the ones that are choosing the underlying investments oftentimes.
Yeah.
And so they don't have oftentimes even the opportunity to put somebody in another asset that's not chosen
Yep.
for them, essentially, like physical gold.
Yeah, and so if you take a look at the legislation that allowed for gold IRAs, it allows for a variety of different things to be put into that IRA, and it allows the customer to direct the administrator to change that mix, if possible. If you want more of this kind of gold versus that kind of gold, or if you want to add some silver to it, etc., there's flexibility, or you're basically more in control of your IRA than if you went with a standard company product.
Yeah, and you're not locked in like you are with many financial products at that point. Some financial products do have a
agree.
time limit and surrender charges and things like that.
Ed, I know that technically you can't have collectibles for your IRA. Do you think that in the olden days that people thought, well, it's a gold coin, it's just a collectible, kind of like baseball cards or stamps. And then they realized, well, with that, it could burn away and it could be gone. But with gold, it's still gold and it's still worth something. Is that the reason why you think it changed?
Prior to 1997, so there's a period of time where basically gold was money.
Yeah.
And that ended in about 1972. And so you had gold was just gold at the time. And in 1985, Congress passed legislation to make gold into a bullion, which means the United States Mint can now make gold coins for any customer who wants to hold physical gold, because they thought that was a good idea for the American people. And the gold IRAs is the next step beyond that, whereas it's not saying a traditional or Roth IRA is bad, but it has limitations. And the Congress wanted to make sure American people had other alternatives that provided a different kind of investment.
I want to talk about required minimum distributions, the RMDs. And I think it can be tough on some people, but especially if you have gold, how do you determine what you sell, what you get rid of, what you keep?
Good question. Really good question. So it's simple. You look at it as your just like you would your regular required minimum distribution. The required minimum distribution is calculated for your total dollar amount under inside the IRA at the end of the year, and then your age at the end of the following year.
Yeah.
So they use a mathematical calculation to calculate the RMD. And when it comes time to take that required minimum distribution, take it one of two ways. You can either sell the amount of gold that is needed to fund that required minimum distribution, or you can take the amount of gold and have it delivered directly to you. From that point, you have that option where you don't have to get rid of the asset that you have. You can take it home, keep it, and then you just pay the taxes on that required.
You have that proverbial pot of gold sitting at home.
Correct. Exactly. So you don't ever have to let go of it if you don't want to.
Yeah.
And that's an important distinction, because while the money is inside of the IRA, the IRS does require that it be held in custody for you,
Right.
the gold. And so what Steve's talking about is when somebody's ready to take those distributions or is required to take distributions because of their age, in case of the required minimum distribution, they're able to get physical access to the gold at that point and be able to store it at home, like many people want to be able to do with physical gold.
And if you do own gold through U.S. Money Reserve, if I have 100 1-ounce gold bars and I have 100 gold American Eagles, how do I decide what I'm doing? Does it really matter? How do I decide what I'm selling and what I'm keeping?
So it's entirely up to you.
Is it? Okay.
Yeah, and we're going to give you the option. Would you like to liquidate your bars? Would you like to liquidate your coins? Yeah. We're going to give you this for your bars. We're going to give you this for your coins. And at the end of the day, you're going to make the decision, because it's your money or your gold.
Yeah.
Send me the bars, send me the coins, sell the bars, sell the coins. It's so simple. It's just the same as, which stock that you're going to liquidate. At the end of the day, that's going to come down, to you. Now, your advisor may say, I would hold on to these coins for a while and maybe liquidate the bars. We've seen a nice influx in the bar, in the just the bullion price, and that may be the time to take it. The coins, we see that these may be moving a little bit, a little bit slower or a little bit faster, whichever it is.
Great advice, though, that will help the consumer figure out what they need to do.
But I'll tell you, my daughters have already said, when you retire and you don't need the money and you need to take a distribution, take out in gold coins and pass them down to us.
Yeah.
Yeah.
Smart move. And Brad, you mentioned that you don't have the gold. When you get an IRA, you don't have the gold at your house. It has to be stored somewhere. Explain that, and is it similar to having a stock certificate in a safety deposit box?
It's a little bit different because safety deposit box would be an agreement that you have with a local bank to rent the safety deposit box. When you store it in custody inside of the IRA, it goes to an IRS approved depository. There are specific depositories that the IRS has authorized to custody IRA assets or physical metal assets. Yeah. And so it goes directly to one of those. Mm-hmm. And then the record keeper that we partner with, which is Equity Trust, that's the custodian, they keep track of the total dollar amount that is there, and they facilitate that as well.
Yeah.
Equity Trust also, unlike a lot of financial institutions, will allow other assets as well. So if you have a IRA that you have put gold in, you can also later on do real estate, cryptocurrency, and a lot of other things that you cannot do with a traditional custodian.
Yeah, so that's a great point. And one of the things that it reminds me of is when you look at what you can put in a gold IRA, the process of finding an administrator, a depository, buying the gold itself used to all be separate transactions. And that's what I discovered in 1997 when that law passed, and then I became Mint director in 2005, was no one was interested in this because you had to buy the gold yourself, you had to find an administrator, you had to convince the administrator to have custody of the gold, you'd have to find a depository that met all the IRS criteria, and then facilitate the transaction. So only the most motivated people would make that happen. And what has changed a lot was, way before, I bought an IRA, gold IRA, from U.S. Money Reserve. And it was the easiest thing. So instead of working through that complicated transaction, all I did was to say, I have a traditional IRA. I'm going to roll over 25%. I talked to the consultant here at USMR, and they said, okay, we'll give you all the paperwork. Tell us who your traditional IRA is from. We'll facilitate it. All you have to do is just write a check out for the initial fee and transfer and all the other stuff, and we'll take care of the rest.
Credit Steve and his team for making that so seamless. They've worked long and hard over the years to make this a simple, seamless process for customers.
Stephen, how do you make it so easy to roll over an IRA or even a 401k into U.S. Money Reserve?
So obviously there's a lot of training that goes on with our account executives. We then set up a division that is separate from sales, so they have no skin in the game. And their job is to facilitate that transfer or rollover between your current custodian and the new custodian or Equity Trust. And they do all of the work for you. I mean, that was how we wanted it to be. We wanted it to be absolutely seamless where, you're filling out a couple of pieces of paper. You need to, we're asking for your beneficiaries. We're making sure that everything matches what you already have. And then seamlessly the money gets transferred from either a liquidation call with your current custodian or through what's called ACATS, which is the computer system that the custodians use to facilitate those transactions. But it's pretty much seamless. Everything takes around about sometimes as little as 2 to 3 days. Sometimes it may be a little bit longer as paperwork needs to be signed and received between 10 to 14 days. But that's usually it. It's a very, very simple process.
Thank you for making it so easy for all of us, because I know as a consumer that first time I had a 401k that I need to move over and roll over into an IRA, I was lost about it. And Brad, with the education that you do, you help people understand that it's not that hard and we can take care of you.
Yeah, it's a seamless process, whether it's from an existing IRA that you already have or an employer plan that you may no longer work at, or maybe you're at a certain age where your employer will allow you to take or roll money from your from that plan over. But it can be an employer plan or just an IRA that you already have, and it is a non-taxable event because it's never leaving the structure of the retirement vehicle. It's just simply going from one retirement account that's already qualified to another one. So there's no tax consequences for doing that. And we make sure that it's done directly so that you don't have to work with additional paperwork. Like if you take custody of it and then you send it in, it can get more complicated, but we help you avoid all of that.
Keep your hands clean.
Right.
Make it make it nice and easy.
And in most cases, there's no upfront fees or costs with it. We absorb the cost of the transfer, the cost of setting up the account in most cases.
Is that a way that U.S. Money Reserve is different than some other companies?
That's one of the ways. In a small, we take care of the upfront costs, the transfer fees, but I think the big difference between U.S. Money Reserve and everyone else that is out there at this point, and this is how we kind of designed it, was for the customer service after you've bought your gold.
Yeah.
In most cases, everybody's really happy to sell you the gold, and then you're kind of on your own. As that's why I think self-directed IRAs get such a bad name because they're self-directed. You're on your own. With U.S. Money Reserve, we set it up so you're not on your own.
Mm-hmm.
We're going to hold your hand every step of the way, not just through the portion where you buy the gold and fill out the forms, but also after the fact. We have a great customer relations department. You will always have access to your account executive. If you have any questions, someone's always going to be there to answer your call, get back to you as soon as possible. When it comes time for you to take a distribution, just not a required minimum distribution, but just a regular distribution. Most cases, again, you're on your own. With U.S. Money Reserve, you're not. You pick up the phone, you give your account executive a call.
Yeah.
They're going to get you over to the customer relations team, and that team is going to walk you through exactly what you need to do for your distribution.
Yeah.
They're also going to help you calculate your required minimum distribution. They're going to take care of you every step of the way, and that's what really makes U.S. Money Reserve different from everybody else.
I like the term of holding hands. That really helps. And you as a client, you know that.
Yes. And so one of the reasons that attracted me to purchase a gold IRA from U.S. Money Reserve was precisely this. And there are several other reasons. U.S. Money Reserve came on my radar mainly because of my friend and colleague, Philip Deal, who was the 35th Mint Director. There's not a lot of us. And none of these companies that sell IRAs, let alone gold, have any Mint Director association. But U.S. Money Reserve has one with Philip Deal. And Philip is someone that I really respect. He did a great job as Mint Director and spent his life building up this public service reputation for doing the right thing. So if he was going to be associated with U.S. Money Reserve, I knew that chances are he's done the work, and I would enjoy the benefit of him already establishing credibility here. But once I dug a little bit deeper, the other thing that really attracted me is this separate sales force. It's basically operates as a different division. The salespeople aren't commingled with the people that just sell gold, and what that does is it eliminates the incentive just to sell the gold IRA, just to make sure you make the gold sale. And coming from the government, being involved in the regulation of employee benefits, for example, retirement is an area that's scrutinized a lot by the federal government. And so you just can't handle it like the relatively unregulated world of selling gold bullion. And so having that separate division gives me a lot of confidence that things are being done right.
Mm-hmm. Last thing I want to ask all of you is there an age restriction at any point? I started getting a 401k in my 20s, so I could have easily rolled over into an IRA back then. if I'm in my 70s or 80s and I have IRA money, can I roll it over to U.S. Money Reserve and get gold or silver? Is there any limit, any restriction there?
Simple answer is there's no limit or restriction there.
Yeah.
If you have money inside of an IRA, regardless of the age, that money can be transferred
Yeah.
at any time.
So open to everyone to have that handheld and not have to be self-directed and figure things out and make it easy.
Exactly.
Well, guys, thank you all for being here because you've
Yeah.
answered so many questions. I think cleared things up for so many of us. Thank you. Thank you so much.
You're welcome.
Well, that's all the time that we have for today's episode of America's Gold Authority podcast. On behalf of all of us here in the U.S. Money Reserve Studios, thank you for tuning in. If you have any questions or want to learn more about today's episode, call the good folks at U.S. Money Reserve at the number in the description below. They're going to be happy to answer your questions about precious metals and the strategic role they play in achieving a secure and comfortable financial future. Once again, I'm Mike Barnes. We'll see you next time on America's Gold Authority podcast.
The markets for coins are unregulated. Prices can rise or fall and carry some risks. The company is not affiliated with the U.S. government or the U.S. Mint. Past performance of the coin or the market cannot predict future performance. All calls recorded for quality assurance. Offer void where prohibited.